right now. I'm pleased to welcome back to the show David Morgan, one of the preeminent precious metals analysts in North America from silverinvestor.com. David, appreciate you finding time for us on the weekend.
My pleasure, Michael. Thank you.
Well, at least we got some good news to talk about after the rally in silver. I mean, there's a lot of talk about gold. I just talked about gold with Michael Levy, but it was the sick cousin compared to the rally in silver.
Absolutely. Silver tends to overreact. Not that it's overreacting now, certainly well within a very, very good buying range, but it moves more to the up and downside. It's much more volatile, as we all know, than gold, and certainly this week has been a stellar week for silver. We just want to see it press on for several more.
Let's put this into context. I mean, obviously we had formed the lows, I guess, David, around the $18 level and bounced around there. A perspective here that, I mean, certainly a bounce was overdue, but how do we know it's more significant than that? Yeah. That we, that kind of stuff.
I'll interject here. On the 28th of June, we had what's called a key reversal. And a key reversal is where you have a new low, and during the day, it comes off of that low, and it closes at a high above the highest high of the day before. And those are rare, and they're called key reversals for a reason. Now, to understand that, regardless of the manipulation in the market, the facts are the facts. And so when it made this new low around the 1830 level, whomever, whatever, for whatever reason, doesn't really matter. What matters is the market action. The market action was, 1830, I'm either going to cover my position and buy, or I'm going to buy at these levels. Whatever it was, there's a lot of buying pressure. Set it up. Since that day, then I had to get confirmation. And from that time forward, for the entire month of July, we saw it consolidate around the 1950 level. And so then I put an update out for my members only on the trading side of the service, where I show what trades I'm making. Said if we break this level, we should go long. And that was just a little while ago. And then I also showed them a seasonality trade. This is a friend of mine that put together these seasonalities that show high probabilities. And this trade has an 85% probability of working between the August time frame, I won't give the exact date, and into March. And the last time that it worked successfully was that roughly $19 to $48 move. And according to this computer program that my friend wrote, that was a $60,000 move for one contract. Now, I don't advocate trading for everybody, and not very many people can do both. And most people have either a trading mentality or an investor mentality. I'm just been doing this for so long, I've developed both, and I'm comfortable. But when I trade, I've got risk capital on, and certainly my core position doesn't get touched, so I want to be clear on that. But, Michael, all I'm saying in a nutshell is that we have hit the bottom. I've said this is the bottom. I've stuck my neck out. It may get chopped off later. We might test a low, but I don't think it'll be the 1830 low. And I really think if you are not in this market, you need to get in at these levels. And if you are, you want to average down, that's okay. And it's really the time to weed out your portfolio. I mean, you really want to get rid of these companies that aren't going to be able to raise capital and move into companies that have, good prospects going forward.
And let me just come back on that last point you're making, David, because it's obviously an important one. We have had a huge downdraft. I mentioned right at the outset that silver had outperformed gold. Also interesting is now some of the quality mining shares are actually still outperforming the metals.
Absolutely, and that's another confirmation I look for. I mean, when I did this update, I pointed out like the XAU, one of the major indexes, was up like 5%, while gold was only up about 1%. So we always look for about a 200 to 300%, in other words, a 2 to 3 factor over the metal itself for confirmation that we're back in the saddle. And there's one stock that we had that really it isn't a favorite of mine, but it was beat up so bad, and one of my analysts actually caught it and said, David, we ought to put this out on an alert. Didn't do it. That stock alone's up 100% already. But, these are quick moves. Now, you can't catch every one, but many of our stocks have come up, significantly already. And as you said, I just want to backtrack a little bit, Michael, on how well silver did this last week. It was up 14% for the week. Gold was only up 4.5%. And the gold-silver ratio went from 64.4 to that shows you how much faster silver can move relative to gold once we start moving.
Let me come back to the stock side too, and just give us the ballpark, the kinds of things that, again, the down market, I always think you put stuff on sale if you're keen, and we have seen a turn in those shares. I guess there's a couple of questions. What would be the primary characteristics that you're looking for in those shares? And secondly, again, do you have sort of a way of telling whether this is just sort of a normal bounce, but is it a dead cat bounce? I mean, at some point they had to bounce.
Right. Well, I'm looking for this. First of all, the seasonality trade has an 85% probability, so that suggests that this rally usually moves all the way into like February or March. That doesn't necessarily mean it's going to happen this year. So what we need to do is let the market tell us rather than us tell the market. So what I'm doing, of course, is moving my stop up on this trade, and I'm going to take something out of this market. Hopefully it's going to be a lot, but I'm willing to take, a few dollars here if that's all the market gives me. So that's point number one. Point number two on the stock side is you've got to look at your companies and see if they have enough cash to keep going. Even if things start looking very rosy, that doesn't necessarily mean these companies can raise capital. So you have to look at the Treasury. That's the number one. If you're looking in the small stock space, and I know most listeners are, then you've got to just ask or find out or go to the web and see how much cash they have and what the burn rate is. If their burn rate allows them to stay in business for another year or two, and I say stress two, but one at least, you're probably in decent shape. But if they don't, then, or they're really curtailing back where they're basically just going to sit on the cash they have and do absolutely nothing, they might get a slight bounce, a dead cat bounce, if you will, but they really won't participate if the market starts moving up because they really can't do anything. So we really left a cycle quite some time ago where the junior explorers were the place to be, and that was basically from the beginning of the market till probably 2005 or so. And then since the 2008 financial crisis onward, you really wanted to be in companies that were producers or near producers or had such good assets that you knew they would be, merged or bought out or acquired, that type of thing. And that's still the space that we're in. Now, I'm going to talk about both sides of my mouth slightly. When we go into the panic manic phase, which is probably moving into 2016, then any stock that's around will move because there'll be such a panic manic mania. I mean, this will go in the record books as far as I'm concerned, that people will buy anything, especially cheap stocks. But the problem, Michael, is that which ones are going to make it to 2016? And so you don't want to have a bunch of penny stocks right now that are undercapitalized for the next, 3 years when they can only go a year. At the end of the cycle, and we've already are building a strategy called the sacrifice fly, and I don't have time to get into it, but where we're going to really speculate, but with a fair amount of money, but not overdo it, because we know from past cycles that this next one, I think, is going to be a worldwide participation, and anything with gold and silver in its name is going to fly like crazy. It's going to be a lot of money, but it's a very tricky part of the market to I hate to use the word, but play it correctly.
I'm talking with David Morgan. You can find him at www.silver-investor, silver-investor.com. Back more with David. I want to ask him, we've seen some of this. It's also provided an opportunity for companies to be bought out that somebody may have, as David's just been alluding to, and I think absolutely correctly, you've got to look at, do they have the cash or the cash flow to keep their operations going? Well, some with quality properties may not, and they actually provide an interesting opportunity for more senior companies to take on. We'll ask him about that when we come back right across the Chorus Radio Network. I'm glad you're with us. I'm talking with David Morgan, where you can find him at www.silver-investor.com, one of the preeminent precious metals analysts in North America. David, before the break, we were chatting about, you got to be careful in that, you want to make sure if you're interested in this sector, interested in this case, we're talking silver producers or silver mining companies, you want to make sure they've got cash. I'm wondering, are you hearing any talk about merger or acquisition kind of talk there? That maybe companies with cash, more senior, are going to take advantage of some of the challenges that smaller companies with maybe good properties have, and it might be an opportunity for investors.
Well, yes, of course, and sometimes we get hints, and But you look at First Majestic, which we had on the list at $4, and quite honestly, it was under $4 for quite some time. But I knew the fundamentals, and I knew I was right. And of course, that company really took off. Now it's on the New York. It just did an acquisition recently. Sandstorm, another one of our up and comers. We think this stock is a long ways to go. It made an acquisition recently. So you're spot on, Michael. These companies that have cash, that have good management, that have a strong treasury, are looking for assets, and they buy them cheap. And the other companies, actually, I think for shareholders, the other companies, in a lot of cases, not all cases, of course, actually come out pretty good, because what they get is they usually get equity, they usually get stock. So they'll get so many shares of, say, Sandstorm or First Majestic in those two examples. And in my view, those are stronger, more diversified companies that they're probably better off holding for the longer term than perhaps the company that they got bought out by, or the company that they had that was bought out. So, yes, and we'll continue, yes. And the other thing I want to comment, I was thinking about this during the break, is, and this can't be proven, but I'll state it quickly. I think there's a sweet spot for a lot of things in industry. In other words, you can get too big to optimize your production capacity. For example, Barrick is really struggling. They're too big. I think there's a sweet spot in mining. There's probably a sweet spot in auto manufacturing. There may be a sweet spot and I don't want to belabor the point, Michael, but what I'm saying is that the market going forward, it's not bad to own some of the larger companies, but be very careful, because some of these things are so gigantic that they really have trouble increasing their bottom line. Of course, they'll move because the price of gold or silver is moving, but they aren't going to move with the rapidity or the abilities that the smaller, more agile companies will have.
But again, you're refining what you're looking at, and I just want to reiterate for everyone listening is that, so you're liking these companies that are sort of maybe a little more mid-sized, because your point's very well taken. I look at that, by the way, David, forgive me for digressing, but that's the problem with government, especially in the U.S. It's just, I mean, it doesn't matter what my philosophy is or anything. It has become unmanageable. It's so large. And the Snowden thing with NSA is a great example. The guy just walks out on a thumbnail drive with all of this data because it's just not manageable any longer, but it makes perfect sense. I see this as a huge problem for companies all the time, that they've become so bureaucratic and so large that they can't take advantage of things. They move too slowly. The costs are not efficient. Barrick is a great example of that.
Yeah, well, thank you for backing me up. I really, truly believe that. Well, I've got something on the front of the website I just put up this weekend. It's a silver saving program. It just opened for Canada several months ago, actually. It's been available for Canadians, and it's a way for the small investor, and I don't know how many of your listeners are small investors, but it's a way just to buy the physical metal and have it dropped off in the mail to them monthly. So it's something that I'm associated with. I like it. It's very simple. It's available to Canadians, and it's something you might take a look at. I made the video. It's about 1 minute long, so it certainly won't take a lot of your time. That's just on the front page of silver-investor.com.
That's very interesting, because that's the other question I had written down here for you, David, was this whole distinction between people buying the physical gold or silver in this case, buying the physical, and looking at the demand there, and you've seen it in both the silver and the gold markets, compared to what the price action has been. And I'm going back to, say, April and marking through April and May and June, when the price of the metals themselves on the markets were going down, but the demand for the physical was going up.
A total disconnect. I mean, we all know these markets are manipulated. I mean, there's a few that will hold out and state, no, it's not. But, I mean, anyone that's clear thinking can look. Just look. You don't even have to think, and you can see it. I mean, these, especially in the Asian world, you've got India now where they're making it very prohibitive to own gold. I mean, Indians, if anybody, understand what a paper currency does. I mean, they don't want the rupee. They want gold. They want silver. And so there is a huge demand, and there's clues, especially on the gold side. I always felt that it would probably happen on the silver side, but I try to remain unbiased. If it blows up in the gold market first, then so be it. And, I mean, Germany can't get their gold back. The New York Fed says, well, yeah, you'll get it back 7 years. You have this Dutch bank that says we have to settle in cash. The COMEX is being drained of gold. It has pitiful amount left. So the gold side looks to me is getting squeezed much harder than the silver side, although it's hard to tell. But nonetheless, there's very evident, there's lots of evidence that something really powerful is going on in the gold market and the physical side. Excuse me, Michael, the physical side of things. And this, I think, is going to manifest quickly. I said 2013 would be a transition year. What I meant by that is we'll probably hit the low, we start coming back, but the transition I was looking for was a psychological one. It'd be the one, Michael, where you have a family member or somebody that you know that is just giving you the business for the last 2 years that gold isn't good, silver isn't good, nothing's really going on in the economy. But by Christmas time, they're saying, you know what, Michael, you're right, I concede. Something is drastically wrong with this thing, and I think I better start thinking about the precious metals. That's a transition I'm looking for. Once that takes place, then we start the next leg up, and it's going to be a doozy.
It is interesting, by the way, David alluding to India, because I know that India increased the taxation on gold to 10% this past week, and their Reserve Bank banned the sale of gold coins or medallions or whatever if you don't have a license from their foreign trade office. So clearly you see the government's intervention in these kind of markets that constricts the buying and selling. And it'll be interesting, as you say, if gold is leading silver in that way. David, as we go forward, only got about a minute left here. I just want to what are you really looking for here? Is there a key to confirm? Is there a key number you're looking at that confirms that this is more than just sort of that bounce off the low?
Absolutely. I'm looking for $26 in silver and $15.50 in gold. I want to see those levels attained before or by the end of the year, and, of course, consolidate and move higher than that. So I'm looking for where we broke down to be achieved by this year, and I think we certainly can do that. And once we do that, then this washout that's been so painful has been completed as far as I'm concerned. The market has confirmed that, not David Morgan, the market, and then we can move upwards. So that's what I'm looking for, Michael. That's where I would be assured that I'm telling you I've got 90% accuracy or better.
Always interesting with David Morgan, and I want you to go to silver-investor.com. Also very interesting, David. I had looked at the website and this opportunity for people to dollar cost average if they want to add in both silver and gold. By the way, as you say, it gets delivered to the door, and there's a little video there that people can check out. www.silver-investor.com. David, once again, we appreciate you finding time for us.
Michael, it's always a pleasure. Thank you.
Silver123.net is a silver saver program designed to be as simple as possible. For as little as $50 per month, you can set up and create an automatic cost average buying program that will get silver or gold sent to your door on a monthly basis. The first step to creating an account is easy. You will supply some basic information. Next, you will add a bank account from which you will schedule your purchases. Scheduling purchases makes saving easy. Silver Saver is customizable and allows you to control the amount and the date of purchase. Once you are signed up, you are then given your affiliate code. Now you can save in precious metals and also market this program. You can use email, web pages, and multiple forms of social media to share the Silver Saver program. Silver Saver will reward you generously with physical silver or gold whenever someone you refer becomes a saver. Silver Saver not only provides you with a share code, but also allows you to place your own banner ad on a website of your own. Silver Saver is one of the best ways to start saving and accumulating gold or silver, especially at these levels. Visit silver123.net and start saving today.